We in fact have Mr. Sunil Subramaniam now with us, market veteran, joining right in. Warm welcome to you, Sunilji, and thank you so much for taking the time out. Well, we've seen a stupendous move in the markets as of yesterday, and we cheered the Trump card being played across the globe. How are you really looking at the setup now? Do you think that was large part of exuberance that played out for a single day, and there will be profit booking today, or do you think Trump victory has much more for the Indian markets to be played out going forward?
I think both of your answers I will support. Yesterday was not just exuberance, I would say relief rally. What is the
Okay.
relief from? The relief from the uncertainty. Because the pollsters had predicted a dead heat. And if there was a election that was going into the litigation and stretching, markets don't like that. And I think all the nervousness before that, and the fact that there was a clear mandate, that was one relief rally. Number one. Number two, I think is that Trump is a known person, right? I'll not use the word devil, but I'm saying it's a known person. What I'm saying is, again, from market wants clarity, right? So we have his previous term to see where pre-election rhetoric will be, where post-election action will be, right? So you do some things to win elections, but you don't need to do them with the same intensity because you're in power now. Now, and then when you look at Trump, right, this is his last term. There's another election that he's going to fight, right? So he's going to try to leave a legacy. So he'll try to move as a world leader, try to solve the war situation, try. So a lot of the fear around the immigration stroke tariff part, right, which was the cause for some amount of tension, I think it will get eased now. Because look at it from a practical perspective, right? Immigration, his fears or his actions are against the low end Mexican border crossing low end people. All his talk was about that, and that's something he's going to try to build a wall and cover. And one second, illegal immigrants, right? He doesn't want to regularize, like Trump. Biden went ahead and gave the spouses of illegal of the those who were coming legally but wives were illegal. He regularized their citizenship. Those are the kind of things he's attacking, not the H1B, which is the high end. There are those skill sets which Americans don't have, so they're not displacing American jobs. So there'll be some token action on H1B and all that, but the reality of immigration is not as feared. That's why the IT sector saw a bounce back yesterday. The second aspect on the tariff wars, and look at it from this perspective, right? America imports from Europe, from China, from India, right? How much do they import from India? 100 odd billion. How much do they import from China? 500 billion. How much do they import from Europe? Much higher. So when he puts tariffs on imports, it's across the board, right? So it's a level playing field. Yes, profitability of some of those exports from these countries will get impacted because of that. But then look at it this way: Trump is a businessman. He's a pragmatic person because American industry needs to thrive. There's also exports of defense equipment, of space related stuff, of aeronautics. So the point is that India is also a big buyer of these things. So you will expect pragmatic approaches. With the way India, he will negotiate on the table saying you're putting too much on agri-related products, but on the contrary, if you're willing to buy some of their defense thing, it will come true. So I think these fears were overdone in the run-up to the election, and the market was there in relief. So there was a big bounce back. The second, is it more sustainable, right? Now, on a day-to-day basis, it's hard to predict the market. Obviously, after yesterday's relief, there may be some profit booking, there may be something, because bear in mind that there's a Fed policy up, which is going to drive with the markets. There's also the fact that we are entering December when the hedge funds book profits to pay bonuses, right? So, a mix of factors on FII flows will come into the factor. But is the underlying trend positive from the Trump election? I would say yes. And why? Because three things. One, the Trump Modi relationship, the friendship, the connect, so that any issues that crop up, I think they can have a phone call and sort it out. That's a big positive of the world leaders. I think Modi is probably the one who's closest to Trump. That's number one. Number two is the fact that Trump has been very clear on the fact that inflation control has to be done. So in these aspects, there are two aspects I'd like to delineate on. The first aspect of it is coming back to the tariffs. See, on the imports, right, to the extent that American MNCs, right, are setting up their own shops in China and importing, or in India and importing, they are ultimately, if you're going to tax those, then you're going to increase the end product price for the American consumer. So he can't allow that. So I think to the extent that American companies which are selling products to the American consumer but are outsourcing a part of their production, Apple for example, they are actually taking advantage of the cost benefits. Now China specific he may want to take action. So I'll bring one small point up here. America's per capita income, per capita GDP is $75,000. China's is $12,000. So that's why they outsource from China. But India's is $2,700. So any anti-China action could lead to a shift from China to India because the cost savings. And end of the day, Trump is a businessman. He's pro-corporate America. He talked about keeping low taxes. So to that extent, right, these things could favor the whole PLI plus the China plus one scheme. So I think that's a positive in the medium term that we could get a boost from American MNCs taking the PLI scheme, shifting management from China to India as a part of this. So those tariff things could actually work slightly in India's favor. That's one aspect as far as the inflation-related tariff is concerned. And also I mentioned that on the tariff, India will be on the table buying things from America, selling things to America. So there will be a more pragmatic approach. That's one. On the inflation part, there's a second thing which is huge positive for India, which is Trump has clearly said that he is going to pump more fossil energy out. Whether it's form of shale gas, whether it's a form of regular oil drilling, he is going to turn the tap on because that's the inflation which hurts the American consumer. Now, if he does that and American supply shoots up, you're going to see crude prices come down. And in the world, who's the biggest beneficiary of crude falling? It's India stock market, India economy, India inflation. Because 85% of our crude we import. So these two things I see as a sustainable positive for the Indian economies to market from the Trump victory. So medium term, I remain bullish. Base market, hard to predict. There could be profit booking volatility in the next couple of months.
Right, ladies and gentlemen, 9:11. The Nifty has settled for the better, 5 points higher. Remember, today it's also the weekly expiry. The Bank Nifty is trying to open 58 points lower. This is a fresh start for the Bank Nifty. It is a new weekly expiry for the Bank Nifty, and the IT index is up 111 points after yesterday's stunning 4 percentage point rise. So keep an eye on IT. Look at Infosys, look at TCS, look at HCL Tech. These will eventually be the biggest winners if corporate US companies start spending again back on IT. What else has improved in terms of opening quotes? Let's look at Tata Steel opening 1.6% higher, 156. Remember, the Indian EBITDA per ton was somewhere like 13,131 rupees per ton versus an expectation of 11,500. So it's a big leg up. Of course, the UK operations did not perform as well, but overall Tata Steel has swung to a huge profit from an equally huge and bigger loss in September 2023. Chambal Fertilizers 1.3% higher, Gujarat Gas 1.1% higher, Sun Pharmaceuticals, again pharma is coming back into focus. These are major exporters. About 50 to 60% of Indian pharma top line comes from the US. Look at Sun Pharma, look at Cipla, look at Divi's Laboratories. These are large cap pharma companies which are now enjoying a very strong bounce. Namaste Sunil ji, and a very warm welcome to you, sir. Any stocks that you would want added at current levels as far as prices are concerned in the long term portfolio? What looks good to you?
It's hazardous to pick stocks at this stage. Rather, I would stick to buying sectoral indices because the earnings season hasn't been great by and large. And even Trump's speak in the run-up to the election, which stocks get affected. I think he's a very brave man who would go and pick single stocks at this stage. I think it's better to stick to the sectoral picks rather than stocks, Shaileji.
We'll get you in very quickly before the markets open. Any key stocks that you'd like to highlight where you have identified potential opportunities?
You're asking me?
Avinash.
Avinash, yes.
Yeah, I think Sakshi, as I mentioned to you, we are positive on the cement sector. Our sense is that the second half for the cement sector should be quite significant. So I think we have been telling our clients to accumulate, stocks like Ramco Cement, Heidelberg Cement. We believe that there's a lot of good long-term value present here. Plus, from the capital goods space, around 3,600, even a Larsen and Toubro looks pretty good. The order book is strong. The company has a very large diversified exposure across defense, infra, capital goods. So I think here also we have been telling our clients that possibly from a 12 to 18-month horizon, L&T also looks to be a quite interesting bet. As of now, we are avoiding the small cap and the mid cap category,
Sure.
due to high volatility. I think the large cap offers a better, decent comfort of margin of safety, and I think capital goods, cement, building products, companies like Kajaria Ceramics. I would say that these are companies where one could use a small SIP kind of approach and take a slightly medium to long term view. I think portfolios obviously need to be rebalanced, but I think you need to bet on stronger companies where the volatility is not going to impact the prices in a very significant manner. So these two three companies could be selective bets from a slightly medium term horizon.
Okay.
Ladies and gentlemen, the markets are upon us, 52 points lower on the Nifty. This is a slight start on the back foot on weekly expiry day. These points really don't affect the overall sentiment. Let's hope that today is a day of reflection and pause, and then the markets restart their upward journey. Bank Nifty down 100 points for the beginning. IT is strong, 170 points higher on the Nifty IT index. Okay. The first look on the Nifty top 10 is weakness. I see all 10 stocks except for TCS posting initial losses. TCS is up 0.6%, 4164. What is Infosys doing? Infosys is down 9 rupees. Let's look at the top 3 heavyweights in the market. HDFC Bank down 2 rupees, 1753, nothing to be worried about. Reliance down 8 rupees, 1376, it's okay. ICICI Bank is down 8 rupees 75, 1293. What is SBI doing? In the green, 855. This is a stock to watch, ladies and gentlemen. We are expecting earnings this week. So far it's not bad at all, and this is consolidation. Hindustan Unilever marginally in the green, ITC marginally in the red, nothing to be worried about. Okay, now let's go to Tata Steel and find out how the earnings are being reacted to. 1 percentage points higher, 155.35. Okay, nothing to be worried about. There is a blowout happening on Apollo Hospitals, 5.7% higher, 73.60. Granules Syngene, so this is the pharma theme that is running well. Granules Syngene, strong quality mid caps are in the green from the pharma space, 1.3% higher on Granules, Syngene 1.2% higher, Laurus in the green. Let's look at the top gainers in the large cap pharma space, and that would be Sun Pharma in the green, 1830. Do we see Cipla somewhere? No. Dr. Reddy's again in the green, 1303, despite a drop in margin. That's how it is. And Apollo Hospitals is now in the top traded list in terms of volume as well. 190 crores have been traded in the green. BSC, it's there every day, 4% higher. Zomato again recouping strength. Swiggy's IPO is open, 2 percentage points higher. PPL Pharma fresh record high. RVNL 2 percentage points higher, and of course you have stocks like TCS. This is interesting. TCS is the second most active traded counter. Normally that does not happen. So this is how markets have opened. Strength in Nifty IT, and it accelerates further. 230 points higher. TCS, HCL Tech, Persistent Tech, Mahindra, Wipro and Coforge are the top gainers. Avinash, share with us a quality IT pick which you think is still reasonably valued.
I think my guess is that I think Tata Technologies looks quite interesting, because considering the fact that it's beaten down and it offers a good opportunity for somebody who wants to take a longer term view. although the broad consensus in the markets are that the numbers have not been very encouraging, I would say that at these levels, there's very little to lose. And I think if one has a 2 year kind of perspective, then I think a decent amount of money shell can be made in this counter. I think they have a large, good marquee clientele base. Earnings numbers have not panned out as per expectations, but I think I would say that you need to give in a little more time to this company, considering the kind of sectors and the kind of business opportunities they're exploring. So I think over the next say 12, 18 months, if one were to hold on, I think one could recently expect a good upside. So this could be a contra bet, but yes, quality management, quality business, a very strong balance sheet, and good visibility of numbers because order book still continues to be pretty good.
Got it. Let's look at the IT space yet again, 0.7% higher. It's now gathering further strength on top of over 4% move that was seen yesterday. TCS is 1.5% higher, Persistent, HCL Tech, Wipro Tech, Mahindra, Coforge, L&T Technology Services, all of them are gathering pace now. Let's get Sunilji to address the IT space as a whole. Contrary to what was being seen as a popular belief that IT space may actually feel the wrath of Trump's, strict policies on H1B, this has been a sharp outperformer as of yesterday, and it continues to move up in strength as well. Earnings have not been very, surprising on the positive side. Where do you think the IT stocks are really finding strength from right now, and where do you see investors' focus should be in the IT pack?
So I think 2-3 parts to this. So first is that I think the whole immigration related H1B was overdone because H1B visa is only a part of the way IT companies do their work in the US, right? That's the onshore work. IT companies have the options to do nearshoring, which is go to other geographies and supply the US, or they can do offshoring, which is from India, neither of which comes under the H1B visa bracket. So they have a way out of that, even if that comes through in a little more severe way. That's one. Second is the point is from an IT investor's perspective, right? The US business is improving. Now, with Trump, there's a strong effect that the US business's profitability will improve because he'll keep taxes low, he'll make pro-business related. So any US business improvement is a strong positive for IT from a business. So though current quarter earnings and guidance was not great, the future outlook looks good. The third aspect is Trump is already resulting in a strong dollar. A strong dollar is a weak rupee. And a weak rupee, a depreciating rupee is favorable for the IT sector. So that again is a tailwind from that perspective. So I think fourth aspect is that if you look at from the IT perspective, there are a lot of American IT companies like IBM, Accenture, all of which are also outsourcing from India into there. So I think that they will recognize that ultimately this is a business which is critical, and the US does not have enough skilled workers to substitute the Indian IT skilled workers, which is very different from what the Mexican related immigration is leading to. So I think it's a very different kettle of fish. There was apprehension, so the IT sector had a little bit of a challenge, but now that it's clear, I think the headway is. And finally, I would say that when passive funds make a return, right, and when active fund managers from US put money in, they seek a safety-oriented sector in a risky-oriented market. And IT fits the bill because those people, not only is IT more safe because it's not cyclical, but the buyers being in the US, they're able to get a sense of the order book. So if Infosys or Wipro or anybody says something, they can counter check it with their companies in the US and validate it. So their comfort zone improves dramatically. So whenever there's a pro-emerging market, pro-India kind of a FII flow, IT would get its share of buying. So that's a good support base for the IT sector going forward.
Let's dip into the broader markets at this point of time. We are at 923. It's holding for the initial part, and of course a weaker rupee at a record low is one of the biggest benefits that Indian IT can hope for. They get almost 95% of their revenue from the dollar. Okay. Top gainers in terms of NSE 500. You have a trend on Apollo Hospital, 6.5% higher, 74.24. ITI, the government telecom gear maker, 7.9% higher, 250. Policy Bazaar, strength, 4.8% higher, 1741. You have JM Financials going strong at 3.5% higher. This was high beta, low ticket. You have JSW Energy in good shape. Zomato 2.5% higher. I'm wondering if we can get Avinash's view on Zomato. The Swiggy IPO is open at this point of time. Would you prefer Zomato or Swiggy, Avinash?
I think undoubtedly, Shell, see, Swiggy is now going to give a proper peer comparison to Zomato. But I think my choice would be Zomato. I think clearly from an operational perspective, Zomato has done a lot of activity to ensure that its operating profitability improves, cost cutting comes in. And I think Blinkit is also now very close to break even. So my sense is that yes, maybe on a slight correction, Zomato can be acquired for a 2 to 3 year kind of time frame, because these are businesses which are not easy to break even so easily, and only two players operate in the market. So there's a lot of runway, for them to cover, specifically not only in the metros, but even in tier 2, tier 3 cities where, the concept of food delivery is catching up very fast. So Zomato could be a good choice, provided you have a slightly medium term view. Maybe not in the short term, but in the longer term, I think this is a unique business where the growth levers are very strong.
Okay. Sunil ji, let's bring you in as well onto the same question. Do you think one should be really looking to spend their money on a company which is proving itself profitably, or should one really be looking at a new entrant which is lower in valuations?
Well, I think I agree with Avinash there. Bet on certainty. Zomato has proved something that very fintechs find it very hard, is to move to profitability, right? And I think that's a big, big positive, because running a business, see, most of these fintechs and the startups are good at raising money, but then they go and spend it also like mindlessly, and then they say, oh, we will come to profitability one day. Zomato has been a very pleasant change from that, in the sense of the business focus on the cost and bringing it out, and a demonstrated model in a fast growing industry. It's far better to bet on that kind of a model than on another new competitor who's far from profitability. If you look at those numbers, he's very, very deeply in the red. So if he is going to adopt some of the strategies of Zomato to come to profitability, then you're going to see a very different action. So I think at this point of time, I'm in agreement with what Avinash has laid out.
Okay. Got it. Avinash, parting words, anything else that strikes your attention in this market? Currently, we are 111 points lower in trade, slipped below 24,400 already. Anything that strikes your attention?
No, I think one can look at agrochemical companies, Sakshi. My sense is numbers have been pretty solid. If you look at the overall agrochemical basket, compared to last year, I think stocks like Sumitomo, Rallis, Sharda Cropchem. So I think this is an interesting space. Hopefully this year's monsoon has been much better, and I think you could see very strong numbers. Although the second half is normally a slower period, but I think in terms of valuation comfort, I think agrochemical is one sector where I think one can take a reasonably small position, because valuations have come off, and that definitely provides a good entry point, as of now.
Okay, wonderful. Well, thank you so much, Avinash, for being with us.
Let's look at stocks.
To share with us all your thoughts right there. Always a pleasure to host you on Business Today Television. Yes, Shell, yours.
Let's look at stocks where you have earnings-based outperformance. Apollo Hospitals right there in front of you. Now 7,400, 6 percentage points higher, and that's driven by a very, very strong set of numbers. Net profit rose 63% on year to almost 400 crores. The year ago quarter it was 250 crores, and in the first quarter it was 316. So both sequential as well as year on year growth has been seen in net profit. Sales have appreciated 15% year on year to 5590 crores versus 4800 crores in the year ago quarter, and of course the June numbers were at 5000 crores. I'm very sure that this is a record high. Let me just look at the Apollo Hospital chart and then give you a view. Yes, it's a blowout. and a fresh start that has come in post the earnings. What is the volume? 4,400 crore, my apologies, 444 crores shares have been traded on Apollo. Is that a volume buzzer? Let me just check. Yes, already 2.8 times the 5-day average has been traded on Apollo based on very strong earnings. Remember, second quarter earnings across the board have been terrible. So all numbers which are beyond expectations, beyond forecasts, are getting very strong positive response coming in from the market. Apollo at a record high 7,400. Sakshi.
Okay. Sunil ji, let's quickly also get in a word from you. Where do you think, have you identified pockets within the last 1.5 months of dips and correction consolidation playing out in various spaces? Where do you think investors have the best chance to start accumulating now to take the maximum benefit of when the uptrend clearly starts?
So corporate lenders, capital market related financial plays, and consumer discretionary. These are the three, because I see rural demand picking up, coming up. The K-shaped recovery is continuing to be strong, but it soon should see a V-shape happening. So I think that the markets have not really rewarded that. So there is still some, I would say, relative valuation potential there. And I would say that because government spending has been slow in the first half, its trickle-down effect has been felt on the consumption bit also. But I expect government spending to pick up, and consequentially the trickle-down income to lead to consumption pick up. As the budget approaches, the government will have to spend all the money. So I think that's my thing, that discretionary consumption, I think, will be a good pick at this stage. And as I said, corporate banking, because retail banking is where the stress or anything and everything has been, RBI has been putting a lot of efforts, and there is pricing pressure, net NIM pressure, because everybody is fighting out in the marketplace to lend housing loans and retail loans. But in the corporate space, right, as the government also starts spending and the capital goods sector gets its order book in place and go, that sector has, the valuations are already reflecting that potential order book for quite some time now. But I think the corporate banks, who are really going to finance this capital goods cycle, right, their numbers will start to come out in the year going forward, and I think buying them now would be a good chance for getting wealth creation done.
Well, ladies and gentlemen, we are now at 9:32, and we are waiting for one of the finest stock pickers and fund managers in the market, Mr. Dinshaw Inani, CEO of Helios Capital, will be with us shortly. I think he is. Kya baat hai? Dinshaw ji, warm welcome, and as always, this laugh is to die for. So much of positive energy that you bring to the screen, despite pain all around. A very warm welcome to you. And how have you been? How were the festivities? Let's talk about life in general. Market to hota rahega.
Thank you for having me on your show, and a very good morning to you, your team, and the viewers. So the festivities began on a very good note. I mean, Trump getting elected and the markets the way they were, so that, but didn't last too long, I suppose. But we're hoping that things will go on as such after this small blip, as such. And as you ask me questions, I'll tell you why I feel so.
Wonderful to have you with us, Dinshaw sir. Sakshi this side. Tell us, are you really happy with Trump taking center stage? Is that really good for Indian equity markets? Or do you think yesterday was just like, okay, a one-off celebration and we are going to be back to, okay, earnings downgrades are happening, fundamentally nothing is moving right there. We've already been too much higher. So how are you really feeling after Trump's victory?